Price stays near the 120 moving average, but it cannot leave. The April 12th Asia session forms inside the April 9th U.S. session box. Price reaches the April 9th U.S. lower boundary early. It looks clean. It cannot stay below. It dips once. It snaps back. But the distance is small. You see the level. You expect continuation. You act. Then it stalls. No extension. No follow-through. The move slows immediately. Now you are inside. But price is already back. Holding becomes pressure. Price returns to the same April 9th U.S. lower boundary again. This time the reaction is faster, but it travels less. Shorter move. Faster stall. Earlier failure. Same level. Different outcome. You see it again. Same touch. Same setup. Same expectation. But now you hesitate. Last attempt failed early. So you wait. Then it moves. Clean. Fast. Gone. Now the only move with distance is the one you did not take. Now the problem becomes visible. When price reaches the April 9th U.S. lower boundary, reaction always appears. But reaction alone is not enough. The move must create distance. If it does not create distance, it returns immediately. That is where positions break. Now bring in the structure. Below everything sits the April 6th U.S. session upper boundary. It is not touched here. But it defines the failure zone. If price reaches there and stays, this structure is gone. So everything above it is still inside the same condition. Now look at the actual positioning. April 9th U.S. lower boundary. April 6th U.S. upper boundary below. This creates a narrow reaction space. Price touches the lower boundary. Reaction appears. But there is not enough space to sustain the move. Now the 120 moving average adds pressure. Price stays close to it. It keeps interacting with it. It cannot separate. This compresses everything. The closer price stays to the 120 moving average, the less room it has to move. Less space means faster failure. Now the sequence repeats. Price reacts from the April 9th U.S. lower boundary. It pushes upward. You follow. Then it stalls. Before reaching the next structure. Before creating distance. Before stabilizing. It returns. Now the shift happens. You stop reacting to the touch. You start waiting for separation. Price touches the April 9th U.S. lower boundary again. You do nothing. You wait. If the move pushes away clearly, you stay with it. If it stays near the level, you do not hold. Now execution changes. Not every touch. Only the ones that move. Now the upside comes into play. Price pushes higher inside the April 12th Asia session. It approaches the April 10th U.S. session upper boundary. This is where behavior changes. The move looks strong. Candles extend. Momentum builds. It feels real. You react again. Then it slows. No break. No continuation. No extension. It stalls just below. Then returns. Now the full structure is visible. Lower boundary creates reaction. Upper boundary removes continuation. Everything stays inside. Now extend the frame. Above this sits the April 17th U.S. session upper boundary. That is where real distance would lead. But price never reaches it here. So everything inside remains rotation. Now define the actual loop. Price touches April 9th U.S. lower boundary. You react. It fails. Price touches again. You wait. It moves. Price moves toward April 10th U.S. upper boundary. You react. It fails again. Now the worst position appears. Price moves from the lower boundary. You enter late. Distance is already gone. It stalls immediately. It returns faster than before. Now you are trapped. This is where most positions fail. Not because the level is wrong, but because the move had no space. Now the key condition becomes clear. When price reacts from April 9th U.S. lower boundary, the move must create distance toward April 10th U.S. upper boundary. If it cannot reach that direction, it does not hold. Now the final layer. The 120 moving average keeps everything compressed. Price cannot extend far enough before the next reaction appears, so movement becomes shorter. Reactions become faster. Failures become earlier. Now everything accelerates. Reach. Stall. Return. Reach again. Stall faster. Return earlier. You are not trading direction. You are inside a structure where movement exists, but distance does not. The April 12th Asia session continues. Inside the April 9th U.S. structure. Above April 6th U.S. failure boundary. Below April 10th U.S. resistance. Far from April 17th extension. Nothing relocates. Only attempts happen. And every attempt fails faster than the last. Execution conditions remain in transition. Price pushes higher, but it cannot stay. The April 13th U.S. session forms below the April 10th U.S. session box. The session opens inside the middle of the April 12th Asia structure. Price sits around that midpoint. It does not break away. It looks stable. It looks balanced, but it does not expand. Then the move starts. Price pushes upward. It reaches the lower boundary of the April 10th U.S. session box. It reacts immediately. You see the level. You expect continuation. You act. Then it slows. No clean break. No strong hold. It hesitates. Price pushes again. This time, it reaches deeper, toward the upper boundary of the April 10th U.S. session box. Now it looks stronger. Momentum builds. Candles extend. The move feels real. You follow. Then it stalls again. No acceptance. No persistence above the level. It stays briefly, then drops back. Now you are inside again, but the level does not hold. Now the pattern becomes clearer. Each push reaches higher, but each hold becomes weaker. Distance appears, but duration disappears. Now the next level comes in. Price reaches the lower boundary of the March 17th U.S. session box. This is where extension should continue. This is where distance should expand. It touches. It reacts. But it cannot stay. The move slows again. Reaction comes faster. Pullback becomes deeper. Now the entire move begins to collapse. You feel the pressure. You chased the move upward. You expected continuation. But now it is gone. Now the return begins. Price drops back inside the April 10th U.S. session box. Everything above was temporary. Now the execution problem appears again. If you chase the breakout, you enter at the end. If you wait for confirmation, the move is already gone. If you hold above the level, it reverses before stabilizing. Now the structure repeats. Price moves up, fails to hold, returns inside, moves again, fails earlier, returns faster. This is not expansion. This is extension without acceptance. Now the key condition. When price reaches the April 10th U.S. session box, it must stay above it. If it cannot stay, it returns. When price reaches the March 17th U.S. lower boundary, it must extend beyond it. If it cannot extend, the entire move collapses. Now apply this again. Price pushes up. You wait, not for the breakout, but for the hold. If it stays above the level, distance continues. If it fails to stay, you do not hold. Now the difference becomes clear. The move is not defined by how far it goes, but by how long it stays. Now everything accelerates again. Reactions come faster. Failures come earlier. Pullbacks deepen. You see movement, but you cannot keep it. You see breakout, but it disappears. You see continuation, but it fails before forming. Now the structure is fully visible. April 13th U.S. session pushes through April 10th U.S. boundaries, but cannot hold. It reaches March 17th structure, but cannot extend. Everything above becomes temporary. Everything returns to the same area. Now the environment shifts. More movement, less stability, more extension, less duration. Now the trap is complete. You think the move is stronger, but it is actually weaker because it cannot hold. Now the condition remains. If price cannot stay above April 10th U.S., it returns. If price cannot extend beyond March 17th, it collapses. If extension comes without duration, it fails. Now the session finishes, not with continuation, but with failure to hold. Execution conditions remain in transition. Price stabilizes again, but it does not expand. The April 13th Asia session forms between two prior U.S. structures. The session forms between the March 17th U.S. lower boundary and the February 4th U.S. midpoint. Price stays inside that space. It does not leave. The structure is tight. Upper boundary above, lower boundary below. No expansion, only rotation. Price moves upward. It reaches toward the February 4th U.S. midpoint. You see the level. You expect continuation. You act. Then it stalls. No break, no hold, just hesitation. Now the move slows. Reaction comes faster. Distance becomes smaller. It returns. Now the lower side becomes visible. Price moves back down toward the April 13th Asia session midpoint. That midpoint aligns with the March 17th U.S. upper boundary. This becomes the reaction zone. Price reaches it. It reacts. This is where execution forms. Not at the extremes, but at the middle. You see the alignment. April 13th Asia midpoint. March 17th U.S. upper boundary. Same location. Same reaction. Price reaches it. You act. Now the condition. If price holds above this area, movement continues upward. If it fails to hold, it returns again. Now the risk becomes visible. Below this sits the March 13th Asia session lower boundary. That becomes the failure line. If price moves below and stays there, this structure breaks. Now the upside target appears. Above sits the February 4th U.S. session upper boundary. That is where distance leads. That is where extension completes. Now the execution frame is complete. Entry forms at the April 13th Asia midpoint, aligned with March 17th U.S. upper boundary. Failure appears at the March 13th Asia lower boundary. Extension leads toward the February 4th U.S. upper boundary. Now the behavior. Price reacts from the midpoint. It moves upward. You hold. But again, the same problem appears. It slows early. It hesitates. It does not extend cleanly. Now you feel it. Even correct positioning does not guarantee continuation. Now the difference. If price moves and creates distance toward February 4th U.S. upper boundary, it holds. If it moves but stays close to the entry area, it fails. Now the pattern repeats. Reach, stall, return, reach again, stall faster, return earlier. Now the structure tightens further. Distance between levels shrinks. Reaction speed increases. Tolerance disappears. Now the execution becomes harder. You must react quickly, but you cannot hold long. You must wait. But waiting removes opportunity. Now the rotation becomes dominant. Between March 17th lower boundary and February 4th midpoint. Between midpoint and upper boundary, everything cycles. Nothing escapes. Now the final condition. If price holds above the midpoint, movement continues. If price fails to hold, rotation continues. If rotation continues, distance remains limited. Now the session continues. Inside prior memory, inside compression, inside repeated reaction, execution conditions remain in transition. Price pushes into higher structure, but it cannot stay. The April 14th U.S. session forms inside the February 4th U.S. session box. Price reaches the upper boundary of the February 4th U.S. session box. It pauses. Then it reacts. The reaction is immediate. You see the level. You expect rejection. You act. Position forms at the top. Now the pressure starts. The move does not drop clean. It hesitates. It pulls back slightly upward. You feel it. You are right on location. But price is not moving away. Holding becomes uncomfortable. This is where structure defines tolerance. The size of the April 14th U.S. session sets the limit. If price expands above that internal range and stays, this reaction fails. Price tests upward again. Not a breakout, but enough to test your position. Now the line is clear. Above this range, you cannot stay. Then the move begins. Price drops. Now distance appears. Now holding becomes possible. The move extends lower. It approaches the April 13th Asia session lower boundary. This is where the next decision forms. Price reaches it. It slows. The reaction appears. Now the position is in profit, but the move is no longer expanding. This is where exit forms. Not at the top, not at the bottom. At the moment, distance stops increasing. Now the full frame is visible. Position forms at the February 4th U.S. upper boundary. Failure forms above the internal April 14th U.S. range. Extension reaches toward the April 13th Asia lower boundary. Now the balance becomes clear. The distance from entry to exit is larger than the distance to failure. The move travels further than it risks, but only if it holds. Now the pattern repeats. Price reaches the upper boundary again. You see it. You act again. But this time, the reaction is weaker. The drop is shorter. The hesitation comes faster. Now the condition changes. The same level does not produce the same result. Now you must adjust. Not every touch, only the ones that move away. If price reacts and creates distance from the February 4th boundary, you stay. If it reacts but remains near the level, you do not hold. Now the structure compresses again. Upper boundary rejects. Lower boundary slows. Everything stays between. The move exists, but the hold disappears. Now the final condition. If price cannot stay above the February 4th upper boundary, it must move down. If it cannot extend below the April 13th Asia lower boundary, it must return. Now everything accelerates. Reaction faster. Distance shorter. Failure earlier. You are not trading direction. You are trading the space between entry and failure. And when that space exists, the move holds. Execution conditions remain in transition. Price opens below the prior session, but it cannot move away. The April 14th Asia session forms below the April 14th US session box. Price compresses near the April 13th Asia midpoint. It does not expand. Small moves. Fast reactions. No distance. Price moves upward. It approaches the April 14th US session midpoint. You see the reclaim attempt. You expect continuation. You act. Then it fails. Before reaching the midpoint clearly. Before creating space. It stalls. Now it drops. Fast. Price moves toward the March 13th Asia session lower boundary. It reaches the level. Reaction appears. But again, distance is limited. Now the structure is clear. Upper attempt fails early. Lower attempt stalls early. Now the lower edge becomes important. Price forms a base around the lower boundary of the April 14th Asia session box. It aligns with the lower side of the prior 1-hour candle. Same location, same reaction. Price reaches that lower edge. You see the support. You act. Position forms at the lower boundary of the April 14th Asia session. Now the risk becomes visible. Below this sits the April 13th Asia session lower boundary. If price moves below and stays, this position fails. Now the upside appears. Above sits the midpoint of the April 14th US session box. That is where the move must reach to create distance. Now the frame is complete. Position forms at the lower boundary of the April 14th Asia session. Failure forms below the April 13th Asia session lower boundary. Extension reaches toward the April 14th US session midpoint. The distance above is larger than the distance below. The move has space, but only if it holds. Now the behavior. Price reacts from the lower boundary. It moves upward. You hold. But again, the same problem appears. It slows early. It hesitates. It does not expand cleanly. Now you feel it. Even correct positioning does not guarantee continuation. Now the key condition. If price moves away from the lower boundary and creates distance, you stay. If it stays close to the entry area, you do not hold. Now the pattern repeats. Move. Stall. Drop. Stall. Return. Now the worst situation appears. Price reacts from the lower boundary. You enter late. Distance is already gone. It stalls immediately. It returns faster than before. Now you are trapped. This is where most positions fail. Not because a level is wrong, but because the move had no space. Now the structure tightens further. Distance between lower boundary and US midpoint shrinks. Reaction speed increases. Now even correct positioning fails faster. Now the condition becomes clear. If price cannot hold above the lower boundary, it returns to failure. If price cannot reach toward the US midpoint, it does not extend. Everything rotates between these levels. You are not missing entries. You are inside compression with limited distance. And inside compression, timing breaks. Execution conditions remain in transition. Price opens inside prior structure, but it does not expand. The April 15th U.S. session forms inside the April 14th Asia session box. The session begins with overlap. No separation. No clear direction. Price moves upward. It approaches the lower boundary of the April 14th U.S. session box. You see the level. You expect rejection or continuation. You act. Then it slows. No immediate failure. No clean extension. Just hesitation. Now the move continues. It pushes higher. It reaches toward the midpoint of the April 14th U.S. session box. This is where structure defines behavior. The move should extend, but it does not. It stalls again. Reaction comes faster. Distance becomes limited. Now you are inside. You followed the move upward, but price is not separating. Holding becomes pressure. Now define the structure. The April 15th U.S. session forms inside the April 14th Asia session. It pushes into April 14th U.S. levels, but it cannot move beyond. Now the pattern appears. Price reaches the lower boundary of April 14th U.S. It reacts. Price reaches the midpoint. It stalls. Everything happens inside the same space. Now the execution condition. When price moves into the April 14th U.S. lower boundary, reaction appears. But the move must continue toward the midpoint. If it does not reach that midpoint, the move fails. Now apply it again. Price pushes upward. You wait. If it extends clearly from the lower boundary to the midpoint, you stay. If it stalls early, you do not hold. Now the sequence accelerates. Reach. Slow. Return. Reach again. Stall faster. Return earlier. Now the environment becomes unstable. More movement. Less hold. More attempts. Less success. You feel it. You follow the move, but it does not hold. You wait, but the move already happened. Now the structure remains. Between April 14th U.S. lower boundary and midpoint, everything rotates. Nothing escapes. Now the condition. If price cannot stay above the lower boundary, it returns. If it cannot hold at the midpoint, it fails. Now the final shift. Moves become shorter. Reactions become faster. Failures become earlier. You are not trading trend. You are trading inside incomplete movement. Execution conditions remain in transition. Price forms at the midpoint, but it cannot hold. The April 15th Asia session forms at the April 14th U.S. midpoint. The session begins in compression. No expansion. No direction. Only overlap. Price stays near the midpoint. It does not move away. This is where pressure builds. Then it drops. Price moves downward. It approaches the upper boundary of the April 15th U.S. session box. You see the move. You expect continuation. You act. Then it slows. No acceleration. No clean breakdown. Just hesitation. Now define the entry. Position forms at the April 15th Asia session midpoint. This is where the move starts. Now define the exit. Below sits the lower boundary of the April 14th U.S. session box. That is where distance completes. Now the frame is clear. Entry at midpoint. Extension toward lower boundary. Now the move continues. Price drops further. You hold. Then it stalls. Before reaching clean distance, before completing the move, now the problem appears. Even correct positioning does not guarantee continuation. Now the pattern repeats. Drop. Stall. return, fail. Now the condition becomes visible. If price cannot stay below the midpoint, it returns upward. If it cannot extend toward the lower boundary, it fails. Now the structure tightens. Distance shrinks. Reaction speeds up. Now even small moves fail quickly. You feel it. You act. It slows. You hold. It returns. Now the entire session rotates between midpoint and lower boundary. Nothing expands. Nothing holds. Now the key difference. When price moves from midpoint, it must create distance downward. If it creates distance, you stay. If it stalls near entry, you do not hold. Now the worst situation. You enter late. The move is already gone. It stalls immediately. It returns faster than before. Now you are trapped. This is where most positions fail. Not because the level is wrong, but because the move had no space. Now everything accelerates. Reactions faster. Distance shorter. Failure earlier. You are not missing trades. You are inside compression. And inside compression, direction reverses faster than you react. Execution conditions remain in transition. Price expands around the prior session, but it cannot stay. The April 16th U.S. session forms around the April 15th U.S. session box. Price drops first. It reaches the April 15th U.S. lower boundary, same level as the prior 1-hour low. You see it. You take it there. It reacts. Not slow. Immediate. It pushes up. For a moment it works. Then it pulls back. Not deep, but enough. You feel it. You entered right. But it is already testing you. Now the line becomes clear. Below sits the April 16th U.S. lower boundary. If it goes there and stays, you cannot stay. Price holds. Then moves again. Now distance appears. Now it feels right. It pushes higher, toward the April 15th Asia upper boundary. This is where the move should complete. You hold. Then it slows. Before clean extension. Before clear breakout. It hesitates. You feel the shift. You are in profit. But the move is not clean. Now it pushes again. It reaches toward the April 14th U.S. upper boundary. This is where continuation must hold. You stay. Then it fails. No strong break. No clean hold. It stalls. Then returns. Now you see it. The move was real. But it could not stay. Now the structure repeats. Lower boundary, reaction. Upper boundary, failure. Now the execution becomes sharper. You take it at the April 15th U.S. lower boundary. Risk sits just below the April 16th U.S. lower boundary. The downside is tight. The upside stretches toward the April 15th Asia upper boundary. The space is there, but only if it holds. Now the worst moment. Price moves up. You chase. You enter late. Distance is already gone. It stalls immediately. Then pulls back faster than before. Now you are trapped. This is where positions break. Not at entry, but at hesitation. Now the sequence accelerates. React, move, pull back, move again, fail earlier, return faster. Now you feel it. You take it. It works. Then it pulls back. You hold. It tests you. You exit. Then it moves again. This is the trap. Not wrong direction. Wrong timing. Now the condition is clear. If price cannot stay above the April 15th Asia upper boundary, it returns. If it cannot hold near the April 14th U.S. upper boundary, it collapses back. You are not trading breakout. You are trading how far it can move before it pulls you back. Execution conditions remain in transition. Price compresses again, but inside wider movement. The April 16th Asia session forms at the April 15th Asia midpoint. Price drops first. It reaches the April 15th Asia lower boundary, then continues lower. It tests the April 14th US lower boundary. You see it. You take it. It reacts, but barely. Small bounce. No distance. You feel it. It is working, but not enough. Now it turns. Price moves up. It pushes toward the April 15th Asia upper boundary. Then higher. Now the key level appears. The April 16th US upper boundary. Price reaches it. You see the breakout. You take it. Now the first choice. Risk stays tight, just below the midpoint of the April 16th US box. It looks safe. It feels controlled. Then it pulls back. Fast. You get removed. Then it moves. Now the second choice. Same entry. Same level. But now you give it space. Risk moves lower, toward the April 16th Asia lower boundary. Now it feels uncomfortable. Too wide. Too exposed. But it holds. Price pushes again. Now distance appears. It reaches toward the April 14th US upper boundary. This becomes the first reaction. You are still inside. Now it feels different. Then it slows. Again. Now the final extension appears. Above the April 16th US upper boundary, plus half of its range. That is where distance stretches. That is where the move completes. Now the full structure is visible. Same entry. Two choices. Tight risk. You are right. But removed. Wide risk. You survive. But you suffer first. Now the real pressure. Which one do you take? You go tight. You get removed. You go wide. You sit through pain. Now the move happens. This is where most fail. Not because they are wrong, but because they cannot stay. Now the pattern repeats. Break. Pull back. Break again. Each time faster. Each time shorter. Now the condition becomes clear. If price cannot stay above the April 16th US upper boundary, both fail. If it holds, only then distance expands. Now everything accelerates. Reaction faster. Pullback sharper. Decision tighter. You are not choosing direction. You are choosing how much pain you can hold. And that defines whether you stay in the move. Execution conditions remain in transition. Price pushes higher, but it does not escape. The April monthly candle moves inside prior compression. March closed inside February. Tight body. Long upper wick. Price moved up, but it could not stay. Now April begins. It pushes back into that same wick. You see it. It looks like recovery. You hold it. Then it slows. Not immediately, but enough. Now you feel it. It is moving, but not breaking. You stay. You expect continuation. Then it stalls. Inside the same upper wick. Now you are exposed. You are above the move. But the move is not expanding. Now the base becomes visible. February low. March low. April forming low. Same region. Price drops there. It reacts. You take it again. It bounces. But not far. Now you are inside again. Different side. Same problem. It moves. But it cannot hold. Now the trap is clear. Above it slows. Below it reacts. Everything stays inside. Now the condition. If price cannot stay above the March upper wick, it returns. If it cannot push beyond that zone and hold, nothing has changed. Now the pressure builds. You take the move up. It slows. You take the move down. It reacts. There is movement, but no resolution. Now the real shift. For structure to change, price must go higher. Not briefly. Not once. It must reach the next boundary and stay. But it has not. Now everything repeats. Push. Slow. Return. Push again. Fail earlier. Return faster. You feel it. You are not wrong. But nothing finishes. Now the monthly condition is clear. It is not breaking. It is processing. And inside processing, nothing holds long enough. Execution conditions remain in transition. Price breaks higher, but it does not prove it. The weekly structure remains inside compression. This week moves above the March first week box. You see it. You take it. It holds. For a moment, you feel it. This time it might continue. Then it pauses. Not a drop. Not a failure. Just no expansion. Now you are inside, above the breakout, but not moving away. You hold. Then it pulls back. Not deep, but enough. Now you question it. Now look again. April first week formed inside March. March formed inside February. Layer inside layer. Nothing escaped. Now this week tries. You follow it. Then it slows again. Now the level becomes critical. March weekly upper boundary. Price sits above it, but does not move away. This is where most breakouts fail. You stay. Then it dips. Not a collapse, but enough to shake you. Now you are forced to decide. If it holds above, you stay. If it slips below, you cannot stay. Now the next target appears. February weekly upper boundary. That is where expansion must go. But price is not there. Now the problem. You entered the breakout, but it has not reached distance. Now the sequence. Break, hold, pause, pull back, test, hesitate. Now the pressure builds. You are right, but it is not moving. Then it pushes again. You hold. Then it stalls again. Now you feel it. This is not failure, but it is not continuation. This is where most positions break. Not because the level is wrong, but because it does not hold long enough. Now the condition. If price cannot stay above March weekly, it returns. If it cannot reach February weekly, it has not expanded. Now everything remains inside. Only attempts increase. Execution conditions remain in transition. Price moves up strong, but space is limited. The daily structure pushes into resistance. Price breaks above the March daily upper boundary. You see it. You take it. It moves. Fast. Clean. You feel it. This is the move. Then it slows. Before reaching full distance. Before completing the move. Now you are inside. But the move is already losing space. Price reaches the February daily lower boundary. This is where continuation must hold. You stay. Then it hesitates. Now the problem appears. The move is strong, but there is not enough room. Now it pushes again. Toward the February daily upper boundary. You hold. Then it slows again. Now you feel it. You are late. There is no space left. Now the worst moment. It stops, then pulls back, faster than expected. Now you are trapped. This is where most fail, not because they are wrong, but because they entered when there was no distance left. Now the structure is clear. March breakout, done. February lower, reached. February upper, not yet reached. Everything is inside transition. Now the condition. If price holds above March breakout, it continues. If it fails, it returns into compression. Now everything connects. Monthly, still inside. Weekly, trying to hold. Daily, running out of space. Now the sequence. Break, run, slow, push again, fail, return. Now the final pressure. You must decide fast. Stay too long, it pulls back. Enter too late. There is no space. This is where timing breaks. Execution conditions remain in transition.